People are like, oh, you run a betting exchange and it has a certain excitement level because people have certain connotations. And now everyone wants to talk about prediction markets and everyone's interested in the model. What's so exciting for me was like all the stuff we've learned and figured out and failed at in the last 3, 4, 5 years is now coming to be in a federal construct, which could be super exciting.
The Business of Betting podcast is presented by Optimove, the #1 CRM marketing solution for the iGaming industry. 4 out of the top 5 U.S. operators personalize player experiences with Optimove, the #1 CRM marketing solution for the iGaming industry. Learn more about Optimove by requesting a demo at optimove.com/businessofbetting. And if you like what you see, you will get your first month free.
What is up, everybody? I am Jason Trost, the host of the Business of Betting podcast. We have a special episode today, guest hosted by Alex and David from Sporttrade to get into all the weeds about all the hot CFTC prediction market landscape. I think you're really going to love this episode. I'm about to go on holiday. I'm taking my kids to the East Coast. Even though they live in London, they don't really know what a baseball game is and hot dogs. So I need to go teach them all those things and teach them all the great aspects of being American. So barbecue, boating, fishing, all the great things that we do in America. So hope you enjoy the episode, and I will see you when I get back from holiday.
Welcome to the Business of Betting podcast. My name is Alex Kane. I'm the CEO and founder of Sporttrade, and we have
David Huffman, the Chief Operating Officer of Sporttrade.
And we're here to talk a little bit about prediction markets. I think it's been top of mind for everybody in the last 6 months, ever since December 23rd, 2024, when Crypto.com self-certified their sports prediction or event contracts. David and I are at Sporttrade, as you guys likely know. We also, this is really David's idea, we just started a newsletter called Bullish Predictions. David, tell us about that.
Yeah, I think there's been a lot of people out in the industry that we've really taken a lot of inspiration on. I think Substack's been a great medium to share news and thought leadership on the industry. People like Dustin, Steve, and others, to name a few. I think Alex and I have just, with the proliferation of where prediction markets have come this year, I think there's a lot of knowledge in our brains that we've really wanted to dump out there and share with the world.
I think what's so exciting to me about this whole thing, David, is like we've lived this whole prediction market thing for years now. And it's been, I wouldn't say disappointing, but I think, people are like, oh, you run a betting exchange and it has a certain excitement level because people have certain connotations. And now everyone wants to talk about prediction markets and everyone's interested in the model. And I think what's so exciting, I think for me, and I think for you as well, is like all the stuff we've learned and figured out and failed at in the last 3, 4, 5 years is now coming to be in a federal construct, which I don't know, could be super exciting. I mean, that's the way I think about it.
Yeah, I mean, it really legitimizes the business a bit. I think the biggest joke I tell everybody is when I started dating my girlfriend, her parents asked, what does this guy do? And she told him basically I was a bookie, but went into a little bit more detail then. The parents were like, whoa, no way. You can't be dating a guy like that. And it took a bit to break through to them. And then when they realized the business we're building, they really realized how cool and how valuable a lot of the stuff that we do is. And we're not just bookies. And what we're doing is, and so I think it's really cool that a lot of this has come to fruition this year. And not being a part of it has been sour, but being around it and seeing it exist around us has been really cool.
And I think we're going to be a big part of it. I think it's going to take time. I think one of the cool things about starting this, and we'll get into the article that we just dropped, but one of the reasons we want to start Bullish News is like, we've had a lot of this knowledge and we feel like it's finally this confluence of trading and finance and commodities and futures and sports betting in the best possible way. And there's so many people out there that are trading experts that don't know the first thing about sports. And we still joke about the people we meet that are in sports betting that call it the CTFC and a FMC license and, don't really even have the acronyms down. So I think the idea was to really focus on prediction markets, but how they intersect with, from a regulatory, user experience, legal, all of those sort of things. Is this our third article? Third article. Yeah. So we're excited. If you guys have any ideas out there, we could do like an AMA sort of Substack. If you're out there and you have something interesting you want to write on, we're going to do some guest stuff as well. So we're really excited about it. But we just released this and we wanted to do a catchy name. So we said, Robinhood has the highest margin in sports. Like, David, this was your idea. Like, what's the inspiration behind this article?
I think there's been a misconception all along that prediction markets have very low margins, right? And everybody's come, and we've talked to a lot of investors, we've talked to a lot of people in the industry, and they say, well, this business seems really cool, but how are you guys going to make money from this, right? Like, you're looking across the board, all these operators are holding 10, 15, 20% across these parlays. These products looked a lot more attractive to us. And so I think what we're trying to accomplish in this article is showing how much margin really can be taken out of these prediction markets and how there's a lot of room for it to even narrow even further, right? And so Alex and I are in the weeds each day with the numbers around this. And I think we looked at this and we know it internally, but we really want to share it.
Yeah, I think the thing for us is so exciting about, I mean, I remember where I was when Robinhood, talk about your girlfriend and whether she is kosher with what you do as a business. I was in Paris and I almost never travel. I was in Paris and Robinhood listed election contracts. And my girlfriend is sitting across the table from me and she's like, are we going to have dinner tonight? Are you going to, and I'm like, I'm like, Kate, how do I explain to you Robinhood just crossed this Rubicon, right? That it was clear that once you have, these election contracts, it's so easy to imagine a world where you could swap out Trump for the Chiefs and Kamala for the Eagles, and boom, there you go. And we try to show you in the article what the UI looks like. But I think what we should do maybe is like walk through it at a high level. The thesis is, you hear people all the time say, as David said, like prediction markets aren't going to work. It's, Robinhood's only taking 1 cent out of 100 on every trade per contract on Robinhood, and FanDuel's holding 10%, David or Alex, and, they want that number to be 15%. So it just doesn't work. And I think we sit at this really interesting intersection of not only understanding prediction markets, but also understanding all the costs that go into revenue. That when an operator says they've held $100,000 or $1 million in a certain state in a certain month, we already know, well, there's tax, there's federal excise tax. So let's walk through that. Let's start at the high level. FanDuel's 10. How did we arrive at we arrived, I think, at like 3.57% top line gross hold percentage for Robinhood. How did we come up with that?
Yeah, so the metric that's always been kind of used in gaming and OSB is hold, right? And hold is how much revenue is kept. So what's bets minus bets paid, right? And so Cesar from FanDuel has been so kind as setting the baseline of saying basically for every $100 that's wagered on FanDuel, FanDuel keeps about $10, 10% of that as gross revenue. So that's pretty straightforward.
Yep. And then how do we get to Robinhood's 3.57? Because people look at, well, they only take 1 cent per contract per trade. How the heck do you come up with 3.57? I thought it was 1%. And the way we sort of did that is like we looked at, well, technically the way Robinhood works is it's not just a sports book where all of your bets are risk, right? So we even talk about how we make an adjustment here to say, well, if every trade was made at 50 cents, you take 1 divided by 50 and you get to 2%. But, people tend to take the longer shots. We mentioned like you'd rather bet Justin Rose to win the British Open at 3% than to bet, Shane Lowry not to win, laying 97 to win 3. So we actually think that number could be closer to 35 cents per contract price. So now 2 over 35. And then you have to make that final adjustment, as I originally mentioned, that you're not always making bets that are risk on or trades that are risk on Robinhood. You're taking risk off. And you can actually see that we have a screenshot there of like, they have a really innovative way to show you, like someone just took off 7,100 shares of Duke or whatever it was. And so you have to make a further adjustment to say, well, if 20% of those trades are not risk on at all, then you have to take the hold rate and divide it by 80. And then that's how we get to the 3.57. So right away, I think people are going to look at this and go, I thought it was 1%. It's 3.57%. It's just like, it's because the type of activity you're doing on Robinhood is very different. And I would imagine the cash out rate, I don't know this to be true, would be higher on Robinhood than FanDuel.
I think definitely. I think that, where the market's going to go to is customers are going to start to realize, hey, cash outs on FanDuel have always been kind of like a sucker bet, right? You look at it, and anyone who's smart says, well, they're only really offering me about 75% of what this is worth. I'm better to buy the other side on another sports book, hedge it elsewhere, right? And so when a customer can realize how simple it is to close a position, they get their money back. They don't have to outlay a hedge bet on another platform. I think you're right. The cash out percentages are going to go up because just how simple it is, how fair it is. Customers are always going to know they're going to get a fair shake, right? Transact as close as possible to the midpoint, pay as little as edge as possible. Yeah, I definitely agree.
So now it's not 10 to 1, it's 10 to 3.57. And now we have to begin the process of, and we know this, but like, we don't really look at our gross revenue It's just sort of a meaningless number. And I think anyone in the industry that's ever operated a business understands it's sort of a vanity metric because so much of that proverbial pie is shared. And we actually go through it. We start with tax rate. Caesar, I think he said, was 22.5% average state tax rate. They pay a quarter of that $100, so 2.5% of their 10. So now it's not 10 to $3.57. It's now whittled down to 7.55 to 3.57. And obviously that's such an impact. Like we have been looking at all these increased tax rates and going, I don't know, maybe prediction markets should be federally regulated because they can't bear the same tax rate that the FanDuels and the DraftKings are able to absorb.
Yeah, I mean, this is also a blended tax rate across a multitude of states. I mean, you could go to the 51% in New York. You could look at the new bet tax that's been implemented in Illinois. There's multiple other states. New Jersey's increasing the tax rate. And I think that 22% we're looking at here is only going to balloon up further, right?
Yeah, I hope not. But already we've trimmed it from whatever, $10 to $3.57. And we almost cut that in half. So it's $7.55 to $3.57. We go further down and say, okay, well, that's not it. We're only looking at the costs of revenue. We're not looking at any fixed costs like property, plant, equipment, insurance, the initial licenses, operating expenditures such as, salaries. I mean, these aren't even included here. We're really just trying to come up with, okay, after all the direct costs of the revenue, what are you actually left with that you can then take to spend on things like marketing in the office and staff? And so I think Caesar said the average for FanDuel's 33%.
Yeah, this was we always knew this was high, but this was a pretty shocking percentage to see from me because this does not include marketing spend. This is purely promotional spend, right? This was one of the biggest shockers to me. So that takes FanDuel 755 from post-tax to down to $44.25, right? I mean, that's a substantial decrease already.
I think one of the cool things that I've seen, and who knows how this whole thing plays out, but to me, the fact that Robinhood has not spent a dime in, forget actually marketing the product, in terms of incenting users to sign up. They have this really, really fluid, slick UI where you're able to you already have a Robinhood account. Now you have to go and create a futures account within that UI, but it's pretty seamless. And the balance can transfer over, and they're doing some magic, of course, behind the scenes. I mean, that number, where does that number in 5 years on these federally regulated prediction markets and brokerages? It's certainly not 0%, but it's not going to be nowhere near 33. Like, where do you think that ends up?
I don't know, but the most interesting thing to me really is like Robinhood has always been very good at education to me, and they're very good at incentivizing their users to kind of go through an education journey and trust in them, right? And so it's really interesting to me, while they put no promotional dollars behind this too, they also had a ton of people come on and just use it and pick it up right away. I mean, that was a lot of, that felt great for us as the exchange community to really see all these Robinhood users just go, yep, I got this right away, and not need a ton of incentivization to jump into it.
I think if Deirdre never left Robinhood and went to HIMS, congrats to Deirdre. No way she listens to this podcast, by the way. She was, I think, head of product at Robinhood. I think it would be really interesting to get her view. She would tell you, I think Robinhood put together that EC, event contracts product, within like 3 or 4 weeks. So like we're looking at just the tip of the iceberg in terms of what this could really hold. And the fact that they've generated all these shares traded with not really any real investment in education, the things that they're good at in sort of product, and not a dollar telling users, hey, here's a free share, is like, tells me that the upside for this opportunity is huge. But we're still not there. We're still not there in terms of gross profit. We've got these other costs, if you want to walk folks through that.
Yeah, I think in the presentation they go through and say, I think they bucket it under cost of sales, right? And something like $1.70, so 17% of the remaining costs go towards this. And so this is just stuff like game state data. It's paying your Bet Genius, your Sport Radar for basically what is the down and distance, what's the time left in the game, what's the score, who's on the court. Payments is something that, especially at the exchange, like this is something that we're harping on the most. This is definitely the most expensive of the bunch, right? Customers are depositing, withdrawing daily. Geolocation is a small sliver, KYC is a small sliver, and then market access revenue share. So that's paying your land-based casinos, your tribes, your teams, and whatnot. And so these are our best estimates of how that $1.70 breaks out. They may not be spot on, but I think this is pretty accurate to how Sporttrade breaks these out today too.
I wish for once, maybe Steve Brubaker. Steve, if you're listening, handle does not equal revenue, but revenue does not equal gross profit. much less net profit. We look at Illinois and say, oh man, well, books can share 40, 50, 60% of the revenue. The people that say that don't understand that you pay money to get money onto the platform. You pay money to validate a person. You pay money to each time someone places a bet, you have to geolocate them. You pay money to a league or a team or a casino or a racetrack for the privilege of operating. That market access, piece, and I make a note of it, is like the most horrible thing to ever happen to regulated OSB. And even though we're in this space, I think we look at a world that's more federally regulated and say that's the world, even though we're not participating yet, that's the world where this has the most amount of upside. And so how could we cheer against that? So where are we at after promotions, after taxes, after these other costs of revenue?
I would just jump in on, like, this is the first area we really see expenditure from Robinhood, right? And so if you're looking at it, we're still associating the payment cost to Robinhood and whatnot. But I think the big difference is here, Robinhood has a multitude of different products where customers already have balances on the platform, right? Like I have a Robinhood account. I've bought stocks. I've done crypto. Like you can do 401k. You can spend on a credit card, right? There's interest bearing accounts, right? And so this is a place where customers already have funds on the platform. They're not moving it away from the platform. Maybe they're moving it to other products on the platform, but this is a place where customers really have funds. So things like payments, which is like one of the most expensive things for an OSB provider, is something that's just like easy as can be for Robinhood, right? And Robinhood gets the advantage of working with people like Plaid and some of these other vendors that you can't work with in the gaming space. And I think that's what, like, speaking to another part of what's been really challenging in the gaming space, is like you can only work with these licensed providers, right? And those licensed providers can charge you a premium because they are the only people that have acquired that license, right? And so while there's a cost associated with Robinhood for like payments or KYC of signing up an account, I think it's dramatically less and much better at scale because of those things.
I think anyone that stands in the way of the success of prediction markets, you have to really dig into why that could be. You see something on LinkedIn or X, tap on the account, begin to understand, how are they compensated? How are they incentivized? Because I think so many people stand in the way of it, and you sort of peel back a layer or two and you're like, oh, you work for a payment company that, gets to charge this massive premium. Oh, you work for a company that sells a service. And by the way, we like all the people individually, but those companies stand in the way of what we're clearly showing here, which is you can actually operate a much lower margin business to the consumer, yet retain a lot of that in the form of gross profit, which is just going to come, those dollars get reinvested back to the customer, into more products, into tighter spreads, into rebates, into potentially promotions like we talked about. The opportunity, I think, and the upside for innovation here, because there's not so many of those proverbial hands in the cookie jar, is like, gosh, it's like the most exciting thing ever. And the people that tend to be against prediction markets are precisely the people that have their, left hand so far deep into that glass cookie jar. And yeah, it might get snapped off.
100%. Yeah. So getting down to the bottom of it, like really what we found is, like we said, like the title of the article, like Robinhood really does have higher margin, right? And like this could be increased even further because Robinhood, like I said earlier, like they have such a big business outside of sports. Like sports is one of N things that they're doing, right? And like FanDuel, this is FanDuel's core business, right? They have a couple other tangential things they do, but this is their core business, right? And so when you start to associate other things in, like you said earlier, salaries, marketing, other types of fixed costs around the business, like Robinhood is so much more efficient there. And so where my mind goes is like people who have been naysayers of prediction market model, right? Like you can go back to them and say, we can stretch the margins even thinner across this business and still run a very profitable business around this.
If you're a customer out there, like to me as a consumer, because I bet all the time where I'm allowed to bet, gosh, just the thought of being able to trade, NFL money lines at zero spread when there's competition, like honestly, I think I'll be able to gamble for the rest of my life for free, meaning I'm going to play responsibly, but I don't expect to lose anything on any particular trade. Or if I do, it's going to be, a small fraction of 0.1%. And so we wrote this article yesterday and we were like, what are the takeaways? I think one of the takeaways I wanted to put out there is like, there are people out there that say like, it'll never work and the margins don't work. And I just think like that's indicative of people that have probably never operated in the industry before or like looked at all this, because if you dig in, and that's why we wanted to do it, I also wanted to show off my ChatGPT image generation skills. What do you think about that photo?
It was pretty good.
I think it looks like Robin, like the guy has a feather on his cap. So it looks like he's coming from Robinhood and shopping down FanDuel. And so I added like the little like, well, no, technically That's supposed to be the tax man and the revenue share man and the payments man and the geolocation man or gal, equalizing it to the point where when we started this, we didn't even know where we were going to end up. And when we went through that last draft last night, it's like, I don't know what the exact math is, but like Robinhood holds like a 30% higher gross margin.
Yeah.
Nuts.
So I think, we've touched a lot on what does this mean for like operators and industry insiders and whatnot. But like, if you're a customer listening, what's in it for you, right? And so I think you hit on it a bit, Alex. Like you and I are both customers of this. We use these platforms day in and day out, right? As these platforms become more efficient and there's more competition, so there's competition on fees and whatnot, like this is all going to be so much better for the customer at the end of the day, you and me and the listeners and whatnot, right? Like you said, we're going to be paying so little, if you want to use a sports betting term, vig or spread, right, on these bets. Like our money is going to go so much longer, right? Like win or lose.
Win or lose. Like, and I think that, to me, I think parlays and all these sort of things are inevitable, that they're going to could take years. I can't see a world where the margins on even a parlay don't compress to 1% because of the way this industry works, right? We talked about FanDuel today. FanDuel's an FCM. FCM means they're routing orders to an exchange, a DCM, in this case, Kalshi, in the case of sports. You're going to have so many different brokers, Webull, DraftKings, FanDuel, Robinhood, interactive brokers. You're going to have hundreds and hundreds and hundreds of brokers routing to a small handful of exchanges. And those exchanges allow anyone to come up with prices. And so the first exchange to come up with this innovative, DCM approved parlay thing, you're going to have 40, 50, 60, 70 groups of as small as 2 or 3 guys and gals to the Susquehannas of the world, right? That are going to want to compete on price. And so the compression of spreads is going to be as a result of this marketplace being more of an exchange-based thing versus, if you're an individual brand right now in online sports betting, you can choose the margin. If you're FanDuel and you're just routing to a DCM, you can't choose the price. That price, there's going to be a ton of people competing for the orders that are coming in because it's coming from a FanDuel user. And the thought is, if you're a market maker, you want to service that flow.
100%. I think we're already starting to see people lining up to figure out how can we trade these sports contracts? How can we trade these sports parlay contracts? I think the competition is going to become immense, and it's only the first inning.
It's very exciting. So that's it. I don't know. We wanted to put together. We're really, really, thankful, Thomas and Jesse, for you letting us do this. It's been a while. Sporttrade, we got our first break, I like to say, through the Business of Betting podcast. Jake Williams, again, his life's way too busy. Hope things are going well with you and Maggie, buddy, but definitely not listening. He gave Sporttrade the big break in 2018. I remember reaching out to, Jesse might kill me for saying this, the businessofbetting@gmail.com. I hope that email's already out there, in which case I didn't give anything up. And he responded and he was like, yeah, let's chat. And we chatted about this whole crazy exchange thing in 2019. And we watched our sign-up list go from 100 to 1,000 in the course of a week. And that was, I like to say, like, if it wasn't for Jake and giving me a chance, we wouldn't be here. So everything's coming full circle. So, I really appreciate the opportunity to do this.
Cool. Yeah, it's been great. Thanks again for those of you who are listening. Hopefully we didn't put you to sleep over the article, but I think it's really important stuff, right?
Yep. And look, this is going to be a huge industry now. And there's a boatload of ideas that I'm even thinking about now. Like, hey, that next article, we should maybe write about parlays and how they could ever exist on an event contract exchange. So yeah, once again, thank you. And to those listening, thanks for checking us out.
Yeah, we'll see you next time.
The Business of Betting podcast is presented by Optimove, the #1 CRM marketing solution for the iGaming industry. 4 out of the top 5 U.S. operators personalize player experiences with Optimove, the #1 CRM marketing solution for the iGaming industry. Learn more about Optimove by requesting a demo at optimove.com/businessofbetting. And if you like what you see, you will get your first month free.